Welcome everyone, another edition of #AskRobCo. Hope you're all well, hope you've had a good week. Those of you that are on summer holidays, I hope you're still joining us and catching up on all the property news and everything that's happening in the UK. James, how are you? All good?
Yeah, really good, thanks Rob. How about yourself?
Very good, very good.
Excellent.
Nice and busy. Let's go straight into this week's data and we can catch on some other things afterwards when you do the proper full intro, James.
Yeah, so this week's data, very similar to last week, Rob, and some of the preceding weeks to that, with sale figures up slightly, around about 128 in the past week in terms of sold transactions here in London. So a slight uptick there, whilst stock on the market remains a slight issue in certain areas and certain markets. In terms of the weekly new instructions here this week, we're just under 300, once again 293. So it's a remarkable trend we've seen throughout sort of Q2 and moving into Q3 2021. Those weekly instructions have always been hovering around the sort of 300 mark. So I think, like we said, Rob, the peak of the market in terms of a year ago and those months leading into the end Q4 2020 were around about 600 weekly instructions. And as we now sort of come into the last sort of couple of months of the remaining sort of stamp duty savings, those sort of £2,500 savings, which are possible for buyers still. Like I said, still savings out there, but the market largely reacting to lack of stock, but sales ultimately are still proceeding in the market. And like I say, a bit of a wait and see until we sort of get through the summer months, which is typically quite a seasonally quiet time. And then obviously as the schools go back at the start of September, we'll see how the market adjusts to that, and obviously hopefully increased stock, and we'll see how the market reacts to the full removal of the stamp duty savings.
Yeah, I have it very clear, speaking to all the agents, there are going to be more instructions coming on, and that's already started to happen. So even though we're in the midst of holiday season, and even though generally instructions start getting really strong second, third week in September, when the schools go back and everyone returns, we are seeing now that valuations are on the up. Agents are telling us that people are putting their properties on the market in preparation for that September-October period, and that is happening now. So I'm very, very, very aware that there's an upturn in agency stock, and we'll start seeing that filter through to our numbers in the coming weeks. I'm very, very positive that those instruction numbers, like we just said, that have been hovering around 300 are going to go up, and we will see them hit 350, 400 and upwards from there. So that's a trend that's definitely going to be happening, and we're already seeing it now. That's the news we're getting back from all of the agents that we're speaking with.
Great, thank you, Rob. And just in terms of some more analysis that we've seen in the last sort of 12 months or so, government revenue from stamp duty land tax receipts have surged. Actually, the ONS data is telling us, despite the stamp duty holiday freezing for many buyers, which would ordinarily have to pay stamp duty land tax on homes up to the 500,000. Obviously, that saving is now finished, but in terms of the data is now being released. So it does sort of beg the question, Rob, do you think that the stamp duty land tax, the return to the original thresholds, is that necessary? As the government's revenue has increased, the property market has been booming, there's more activity in the market. I don't know what your thoughts are on that.
I think it's a wonderful tool, a bit like interest rates with lending. It's a wonderful tool to either create incentives and attractions to the market to create some buoyancy, or like we saw back in 2014, where you want to put the brakes on a little bit because you feel that pricing is inflated, then you've got the mechanism to make the changes. So I think it's an open-ended tool and mechanism to take the froth out of the market when it's overheated, or incentivize a market when you want it to move forward. Again, very similar with interest rates. So I think it's a watch this space, and I'm always open for positive incentives where required. And I also think a sensible approach when the market is overheated, using that as a mechanism.
Yeah, I mean, just in terms of some statistics, the Treasury has collected £5.4 billion in stamp duty during the first half of this year, despite the stamp duty holiday reducing bills for many households or even eliminating stamp duty completely. I mean, phenomenal tax receipts for the government. And in terms of stamp duty receipts for June this year alone, these reached £1.2 billion, which is the third highest monthly total record ever. I mean, to be the third highest with much of the income removed with the stamp duty holiday is a phenomenal month. I know we spoke the other week about whether it be the highest ever in terms of transactions. We're yet to get that official Land Registry and ONS data, so hopefully we'll get that in the next month or two, just to be able to reflect on what a phenomenal month it was in the sort of booming property market here. And speaking of the booming market, it's somewhat sort of propped up a lot of the economy in the UK in the last certainly sort of 12 months or so since the first lockdown and measures were eased, and also sort of providing those healthy levels of revenue for the government. And as we've said before, Rob, which you alluded to, the sort of the tweaking of stamp duty has almost become a fiscal instrument for the government in terms of being able to have more control over the wider economy. And although any wholesale overhaul, I feel it's very unlikely, as it's an extreme political topic it is sort of made of. It would possibly be a real positive to see maybe some of the stamp duty land tax alleviated for those entry-level buyers, first-time buyers possibly. And you know, as we've seen, a lot of those charges have been fully removed for the first £500,000, and the stamp duty land tax revenue has gone up. So maybe that's a little sort of reflective point. How sustainable that market was, we're not quite sure, but obviously I think it's had a tremendously positive impact on the market here.
I think, let's be really clear, and we would have discussed this a year ago, because of those incentives, it has allowed the entire property chain from the top end of the market in super prime to the very bottom end to function at all levels, which has allowed for those contributions to have been achieved. And it's that redistribution or distribution of funds or wealth, if you want to call it. And like I've said, numerous occasions, that the deals that happen at the bottom end of the market at 200,000, 300,000, 400,000. I know that sounds like a big number. In London South East terms, it would be the bottom end of the market. Those funds allow people to upscale and move to the next sector in the market, the $500,000 to $1 million, which then allows the million people to go to 2 million and 3 to 5 million plus, 5 to 10 million plus super prime, etc. So that whole chain has been allowed to happen because of the incentives of the stamp duty, and that has led to the contribution levels that you've just discussed, and that's very positive for the government.
Definitely, and like you say, just moving into the sort of UK economy now, which recently was announced, the figures for Q2 2021. So this grew by 4.8%, very positive for the economy here as most businesses emerged from lockdown 3.0 for the first 3 months of the year. Now, data from the ONS has showed that the expansion of GDP, gross domestic product, has largely been fueled by the retail, restaurant and hotel sectors here in the UK, whilst education has also boosted the economy as schools started to reopen in the second quarter, which I think is positive factors for the economy. But notwithstanding this, quarter one 2021, that was when the economy shrank actually by 1.6% during that 3-month lockdown, as COVID restrictions were still in place, and the the all unlikelihood of it, another consecutive quarter of negative growth would have meant a further recession, which would have been dreadful news for the UK. But just reflecting on a whole here in terms of where the economy stands currently as compared to pre-pandemic levels, the economy is still 4.4% smaller than it was pre-pandemic as the road to recovery still continues. So obviously we're yet to get back to that level, but as we say, Rob, some very positive news. Q2 growing by 4.8%, and hopefully, as we move through the summer, the economy goes from strength to strength across all sectors.
They're all very positive signs, and there is a chance that if that buoyancy and those economic indicators continue, that creates a positive sentiment. There is a possibility that we could continue in a good trend, and because market sentiment or economic sentiment is everything, and if people feel good and have confidence in their spending ability and spending power, that can drive the economy. And I'm going a bit off subject here, but just completing the Olympics and the feel-good factor that Team GB have created once again with their phenomenal 65 medals matching London 2012 and just a tiny bit short of Rio 2016. That really got the nation behind those athletes and created a brilliant unity that really has put the country in a good place. I know you've got some other wider topics to discuss, but we shouldn't underestimate the significance of great sporting achievements in driving positive sentiment.
Definitely, it's been a great summer of sport, both in the Euros to the Olympics, and excellent performances by both England and obviously the great British teams. Just going back to sort of the UK economy here, the Monetary Policy met last Thursday and made the decision to keep interest rates at the current level of 0.1%, which is an interesting move as inflation has increased slightly in the past month. June 2021 figures were 2.4% annualised, somewhere just slightly above that sort of comfort zone of anything around the 2% mark. So I think it's getting increasingly likely that we could see an interest rate rise at some stage, possibly in quarter four, or you would expect by quarter one 2022, just to curb those inflation levels somewhat. And as the UK economy starts to recover and get to those pre-pandemic levels, we will see slightly higher than normal GDP growth. And I don't think that's necessarily a boom-bust cycle, but once there's been such a sharp decline in GDP, I think it's expected these slightly higher growth rates that we're seeing quarter on quarter.
Yeah, I mean, I think the interest rate for all the lenders out there is significant. As we've discussed, you've got rates out there below 1% now, which is historic. Let's see what the government policy is, the Bank of England policy is on the interest rates. I think it's been murmured for a long time that there possibly could be an increase, and the increase will only come about if the Bank of England and lending policy feels that it needs to be curbed in. So it may look that way at this moment in time, but as we've seen with COVID and Brexit, anything that brings about another change or more uncertainty can shift that policy and viewpoint. So I think watch this space and let's see what happens.
Thank you, Rob. And just a closing note, I want to say well done to all the A-level and GCSE students who got the results in the past week. Many of those are moving through the higher education system and obviously going to sixth form colleges and universities. So well done to all of them. It's been quite a strange 2 years, 2 summers with no sort of formal exams. So it's been sort of a very tough and unprecedented time for them. And also we've got the start of the Premier League season Friday the 13th later this week. So yeah, that sort of brings us on more domestic sport.
Yeah, looking forward to that. You know, momentous week with a messy moving and lots of £100 million signings, and I think there'll be more to come. So football season starts, and I'm looking forward to next week, touching on and seeing how that's gone for all our respective teams.
Let's see how Friday the 13th works out for, I think, Brentford Arsenal kick off the season. So it'll be an unlucky day for one of those two. Yes,
let's hope not unlucky for Arsenal. Thanks everyone for following on all the platforms, on Instagram, on LinkedIn, on YouTube, following and downloading our podcast every week. Loving the support, loving your notes, loving your comments and your likes. We're here for you. We'll keep providing anything you need. Please do contact us. We are available 24/7. #AskRobCo on all the platforms. Have a great weekend, everyone. Be safe, be well, enjoy hopefully some more good weather, and we'll see you all next week. Take care.
Thanks very much, everyone.